Will this turn into something bigger? The gamma flip line was crossed today, so we saw a spike in volatility. We're going to be discussing what it looks like when that happens, and specifically, we're going to even zoom in and show you what the VIX did, why we slipped, when we slipped underneath that gamma flip line. We'll talk about the S&P 500, how it's doing from a month-to-date basis, look at the sectors, look at some of the intermarket assets. We're going to hop into a couple signal charts, obviously go over the market conditions and the expected moves going into tomorrow's trading session. Got a lot to talk about, so let's go ahead and get right into it. All right, everybody, welcome back. I want to start off here looking at the daily chart of the S&P 500. We've now had 3 days to the downside. We did have buyers step in underneath the 6,600, and we closed basically just slightly above there on the SPX. We still remain within this bull channel. Will we break down at some point? I'm sure that that will occur at some point. When that is, I don't know, but we will be looking at the current conditions of the market, because it'll help us give an idea as far as probabilities go for that to happen. If you take a look at the heat map of the S&P 500, you can see Tesla was once helping us just yesterday, now hurting us today. Other than that, you had Apple up, you had Nvidia up, which really did help out the market overall. Microsoft was slightly down, Google slightly down, and then Meta, right, that was down 1.5%, and then Amazon down 1% there as well. Out of the 11 sectors that make up the S&P 500, energy led the way, and then tech was not too far behind. So a little bit of a mixed board overall. Now, if tech was way down here, this could have looked like a much worse day, but we do know that when energy outperforms the S&P 500, it's not typically great for the markets. In fact, you can look at this chart over here and just take a look. You have oil, the dollar, and the 10-year yield. They're all in the green today. And what do you see in the red? Well, basically everything there from the New York Stock Exchange down to the IWM. From a month-to-date perspective, the S&P 500 is still up. It's up about 2%. Going into tomorrow's trading session, we do have core PCE data, personal income, personal spending, an hour before the market opens up. We'll see if that changes any dynamic as far as rate cuts go into the future. October 29th is the next Fed meeting, and you can see there's an 87% probability at the moment for another 25 basis point cut. Oil was slightly up on the day. We're getting a little bit of a bid here, and that's typically good for energy stocks. And when oil goes up, you typically see the yields rise with it, and that's what we are seeing. The 10-year yield has risen. Oil has risen. Now, I do want to call out that 10-year yield is kind of coming back into this 4.2%. Will it get rejected from this area, come down a little bit, offering up some potential relief in some various assets that recently sold off that are negatively correlated? On the flip side of that, if you look at the TLT, you can see here that the TLT was flat on the trading session. It's kind of looking like it's flagging out. So if the 10-year yield were to, back off here a little bit, perhaps that offers up a flag breakout for TLT. That would be something to watch. The dollar also had some continued strength, and as we already know and previously discussed, when you have a rising dollar, you have a rising yield. It hasn't been that great for the S&P 500, where it typically goes into some period of consolidation and or pullback. So is this the start of something bigger for the dollar? It still had a lot of room to prove itself, because you can see that the dollar is really kind of just back within this value area, this gravity point where we kind of broke above, came back in, came back up, came back down, and we kind of just doodled back in and around. However, we are breaking this downtrend, and we're in that kind of seasonal period where you see some dollar strength, and then perhaps maybe after a nice rip higher, we start to see the dollar fall off and we get our end of year rally, but we still got a lot of time, right? It's only September and we got some Q4, right, still ahead of us. So another 3 months of trading. As far as the sailor to shift tool goes, this has been on a sell signal since basically this week over here, and we bounced up a little bit. Now we're right back down. So it's still on a sell signal, sell trigger. Bitcoin is underperforming the price of gold. That's why you're seeing this currently take place. We're underneath the 50-period EMA on the relative strength line. So yeah, it does look like it can come back in and test these areas. Is there something structurally broken here? I mean, the only thing that we're seeing is our first lower high for a while, but we still do see a series of higher lows. So it's in this consolidation phase, and I'm still kind of foot off the gas with Bitcoin until it can prove itself on my signal and trigger. If you look at gold, gold was up slightly on the trading session, and this is with a rising dollar. So, what's gold telling us? Is gold and potentially even silver, front running what the dollar is going to do, which potentially would be to reverse. That'll be interesting to see, but gold is off the highs a little bit, but just kind of consolidating in and around that current area of around 37 to 3,800. Silver, absolutely bonkers of a move today, 2.94, and it's kind of reaching up to its all-time high, which is not too far off, just in the 50s. Let's take a look at some of the signal charts going on. You can see the bullish percent index on the Nasdaq composite. It did get overbought and it did have a bearish divergence. And we said to just watch for this to potentially play out, where we're seeing a little bit of sell side, nothing crazy. So if this starts to come down into these areas, then we'll say the same thing. Look for a bullish divergence, potentially an opportunity to buy the dip. If we take a look at the technology sector, this was overbought, right? Now it's coming back in a little bit. So perhaps, right, we might see some sort of a bearish divergence form. If this were to pop back up, put in a lower high, if this were to come up and create a lower high, perhaps we'd see some sort of divergence. But as it stands right now, just kind of coming off of its recent overbought condition. You can see the percent of stocks above the 50-day moving average for the Nasdaq and percent of stocks above the 200-day. You only got about 41% of the stocks above the 50-day moving average in the Nasdaq 100. So not that many, right? It's not that big of breadth. And you can see as this is going down, as the market's been going up, just fewer assets are driving the market higher. And this has been going. So perhaps maybe we see some breadth enter the market here soon, or perhaps we get some sort of a flush out back down to around 10 to 20%, and it offers up a very good kind of buy the dip opportunity that we've seen in the past. All right, so as far as market conditions go, I wanted to walk you through what it looks like when we flip under the gamma flip line. And as you can see here, this is the VIX. So what I'm highlighting here, these gray boxes that you see, right? You see little sporadic ones, but then big ones. That is when the S&P 500 falls underneath the gamma flip line. So when we fall under the gamma flip line, what do we say happens? It means that dealers are forced to sell into that selling, buy into the buying, which creates more volatility. And the reason why I always say, you can see if you're swing trading, you're going to see more whipsaws, more fake outs, more shakeouts, more breakdowns. And the reason for that is because you're going into a period where you see expansion of volatility. So for example, remember February, this created an opportunity that wasn't great for swing trading, but it was, however, really good for day trading because you get two-sided price action, a lot of moves. Same over here in July to August of the prior year, you saw a big rip higher there as well. I believe that was when I was on vacation. Now, is this going to turn into something potentially bigger? Well, we'll walk you through what it kind of looks like and so forth and where we stand at this moment. Because the last times we've tagged and got under the gamma flip line, it was actually quickly reversed and we got back above it and we started moving higher. As you can see over here, this is showing the net gamma history of the gamma flip, being above it or below it. And you can see there's been a couple kind of spurts that we fall underneath the gamma flip line. And then over here, we remained underneath it for quite some time. And that was the whole February insanity that we saw in the markets. Now, what I want to highlight here is, yes, we did get under the gamma flip line. And I want to show you what that looks like kind of with the VIX. Now, when did we fall under it, right? The gamma flip line from the morning was about 6,600, right in that range. It's typically a zone, but we started our trading session right here at 6:30 in the morning, basically at it and under it. Okay, then we flipped under it, right? Dealers sell into the selling, they can buy into the buying. It creates that volatility. So it was 6:30, and then it was also right here at about 10:20, we slipped back underneath that gamma flip line, and you could see that selling increase. So what happened to the VIX intraday during those times? Look at boom, right? We saw price action fall under the gamma flip line 2 times, and then you could see how volatility really started to erupt during those periods. So it's important to know, important to watch just how, how the dynamics of these markets work when you are above or below this little line / zone. So it does say that we're in negative gamma or kind of gamma neutral at this point. I didn't update, but I want to see what it looks like in the morning, but we're basically 6580, 6600, right in that range for the gamma flip line. So I updated it after the market session. It put us right down here at that lower weekly implied move, which you can see today. What did we do? We came into the lower weekly implied move in that September VWAP, right? That we said, pay attention to it. We had a first initial reaction and it was quite strong off of it, came back to it and had another reaction from that September anchored volume weighted average price. Now, as far as tomorrow's trading session goes with that economic data, we're looking at a daily expected move, bringing us up here to around 66.50, down here to about 65.65. That is one standard deviation. We have already tagged that lower weekly implied move. As far as the direction of the 5-day moving average goes on various products like the SPY, the Qs, the IWM, semiconductors, and so forth, you're starting to see them start to decline. So yesterday we talked about how this was giving us more of the cautionary sign. Hey, you can either, try to prove to the market that you're right or just let the market prove itself that it's the time to buy. And as you can see, we actually followed through more to the downside. So hopefully you were patient and you waited for those specific levels like the daily implied moves or the September low VWAP to potentially try to execute intraday and make a run. Qs, yes, red, IWM red. Semiconductors, though, which is a very important asset to all these markets, is still in the green. So if semiconductor starts to break, this could look a lot worse, around the S&P 500 and the Qs. But if this does break back up, I mean, we could come right back up and try to test the backside of that 5-day moving average in quick fashion. Let's look at the expected moves going into tomorrow's trading session. Before we do, what did it look like for today's expected moves? You can see here, SPY, the 15-minute time frame, came down into the lower Asher range, right? The lower IVOL range, which, by the way, if you're not part of the Discord or the Patreon group, there's a pinned comment. And these levels, right, you can pull yourself by typing the command into Discord. It's going to give you whatever levels, daily, weekly, monthly, implied moves for whatever asset that you want to look at. It just has to be not a futures asset. It has to be an equity that's optionable. Okay, so we came down, we started underneath the daily implied move from the options market, came down to the lower IVOL range. Boom, we came back up, right? And then we just doodle around. And where do we close? Just right there on that daily implied move. So remember, 68% of the time we go for a tag for these, 68% of the time we close within it. And then there's 2 standard deviation moves, which is 95% of the time. So this is all today's move was all well within the market's expectations. Okay, even for the week, it's all within the market's expectations right now as far as risk. Going into tomorrow's trading session, this is what it's going to look like. We have already tagged our lower weekly, and it's very common. Like we've said, when you come down there, it's very common to come doodle around the weekly implied move. However, if the market wants to kind of break this little downtrend and start to break higher, pay attention to the all-time high anchored VWAP, the week-to-date VWAP, the 5-day moving average, and the daily implied move. So all this right in this range. Be very, very cautious if price starts breaking down in these areas, because these can act as potential levels of resistance. So you'd want to see, obviously, the market to prove itself and have these start to turn back around, and then the market start to break from these levels to feel a lot more confident. If anything, right, you want to see the market show some strength, see if it kind of backs off, does something like this, puts in some higher lows, maybe even shakes people out and then starts to head higher. That would be a lot more beneficial to look at, see what that looks like to feel more confident versus something breaking right out to the upside and then trying to go long here right into these levels that can easily reject it. It's all about how price comes to these levels, if it comes to these levels. Now, if the market wants to continue to sell off, we just pay attention to the lower daily implied moves, which is about 654 down to 653. Okay, and if we do get down there, be mindful that we'd be underneath the September VWAP and we'd be right there at that weekly lower implied move as well. That's all I got for you on today's episode. I hope it helps out. I'll see you on the next.